Joining me to discuss is FDRA CEO Matt Priest. Matt, it's great to have you here. Welcome.
Thanks, Kelly. Appreciate you having me on.
Always looking for sort of these little economic indicators and data points. What is this telling you?
You know, it's telling us that the consumer is concerned, and we've seen that in a number of different consumer sentiment surveys, whether it be the University of Michigan or the Conference Board surveys. And then we turn and look at our own internal numbers. In the month leading up to the inauguration, we saw sales growth of 13% year over year. And you just pointed out, week ending February 22nd, we're down 26%. So it's almost as if a light switch has been flipped and the consumer confidence is drained out of the economy. And in spite of the discussion I heard in the prior segment, this is actually a consumer-driven economy. And so that's our biggest concern, is that if consumers are pulling back from purchases such as footwear, which they need, they're going to be pulling back in a lot of different areas. So we are very concerned about how the consumer is feeling right now.
I have like 8 different questions, so I'm just going to kind of rattle them off. Do we know, A, if tariffs have already affected the price of footwear? B, if footwear is so discretionary, consumers are just pulling back there because they can? C, if unseasonably cold weather, because this was the week of Feb 22, was one reason sales were down so much? And D, now that we're into mid-March, are you seeing any rebound?
Yeah, all great questions. So let me try to answer them as best I can. First and foremost, that was a big week, down 26%. But even if you stretch that out 7 weeks since the inauguration, we're still down 13% cumulatively. And so we are seeing foot traffic down and sales down. I mean, from a broader perspective, as we think about discretionary income and how tariffs impact costs, we've been paying tariffs since 1930. We have upwards of $4 billion a year in tariffs, even before the first and second 10% came on just a few months ago with China. And so we know that costs will go up. Are they going up exactly at this moment based on the tariffs that were applied a few weeks ago? The answer to that is no. But if you look at the president's own data, it shows that as import costs go up and the cost of goods increases at the border, the consumer price index for footwear increases with it. And so that's why we're sounding the alarm and joining what is a chorus of executives across all different sectors of our economy talking about the uncertainty that these tariff proposals drive within our consumer base.
You know, one of our favorite analysts, Laura Champagne, who we have on all the time, mentioned almost in passing the other day that some of the names she covers in the sort of casual footwear space, like Crocs, in particular, were under pressure. But she said that was more of a shift to dressier shoes. That's a much more hopeful story than I think the one that you're telling.
Yeah, I think the other thing is uncertainty. The consumer definitely needs certainty. So even if you don't go ahead with massive tariffs, let's say on April 2nd with the reciprocal proposal that's being bandied about by the administration, if they don't proceed on those, you're still driving this uncertainty into the consumer mindset. And so they're spooked. So they're going to hold back and pull back from their spending plans. Now, if you fast forward to that April 2nd date, and they end up applying tariffs across the board, even for those countries, or those companies, I should say, that have diversified out of places like China and have moved to other locations over the last 15 years,
right,
are going to find themselves sideways with the U.S. government and having to pay an additional tax. These are American companies paying additional taxes at the border just to provide the basic necessity of footwear to our consumers. And so with 99% import penetration right now, there's really nowhere to go to try to alleviate some of that cost pressure, which inevitably will hit the consumer.